everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Outlook, where we take a look at our Big Six markets and formulate an attack method plan for tomorrow. Basically, this is where we go through our major markets, we try to figure out what's happening today, and then we use that information and apply it for tomorrow's price action so we can find some of the best setups, or at least the better ones that we can get our hands on. Now, before we jump into all the charts and the month-end stuff, as always, let's swing on over to Slingshot Futures. You can scroll down, click on the Join the Daily Outlook newsletter, where that will sign you up for our mailing list, so you will never miss a beat when that newsletter comes out. So you will know ahead of time, always, when this is coming out every single day right to your inbox. We also send different statistics, different bits of information, and different interesting things, as well as a few stocks to maybe keep an eye on. So definitely a great newsletter to keep your eyes peeled for. And then along with that, at the bottom in the blog section, you'll notice every single morning we post our live trade room morning prep levels, and this is where we cover all of the major levels of support and resistance for that day of trading. So make sure to grab those every morning as well. Now, looking at the charts, today really felt like a balanced kind of day. We're going into the end of the month, right? Tomorrow is the last day of the month. We've got a lot on the minds of traders as we close out February, going into, you know, did we actually go anywhere in February? Are we seeing some decent movement? Are we forecasting a pretty good move going into the following months? Or, you know, was this month kind of slow? And I think everybody can agree this month was pretty slow. We had a lot of movement back and forth, but it really didn't accomplish a whole lot. Lots of up, lots of down. We kind of ended in the middle. Now, that's not every market, of course, but it felt that way a lot of the time, where we were just sort of stuck. Now, looking at the Eurex exchanges, right, the FGBL and the Bund, we can see, once again, very range-bound. I mean, on Friday we had some nice upward momentum, but range-bound in the middle, and now we're starting off with a range to kick the week off. Now, interesting little tidbit, we have an unfilled weekend gap back at 166.35, and that could definitely play a part in terms of a magnet to draw the market back. But in reality, we have a weak bear trend working its way lower, nice bear channel working down. In the grand scheme of things, though, where are we? We're just in a range, right? We haven't really gone anywhere, and if anything, they're trying to break out through the bottom, and we know that most breakouts fail, so we're looking to buy down here for a rally back up. Now, honestly, what I would like to see is for the market to make an attempt down, try it one more time, and then fail from there for maybe some continuation towards the upside. A double bottom may be good enough, but, you know, maybe zooming out a little bit and finding some other potential areas of interest. We can definitely see the last time we were around here, this is where the market got really chopped up. So it's not a surprise to see us kind of fiddle around this, and I would love to see the market dip down to the lows of that, you know, right around, if we mark that up, the 165.82 area for potential support. That would also be a blow off through the bottom of the bear channel, and that would add a lot of emphasis towards the buy side. So overall, we definitely want to be buyers here, but we may be able to get our hands on some better pricing. Looking over on gold, for the most part, we have a range that expanded and then fell apart. We started off relatively range-bound, new low, new high, into a new low, into a new high, and it looked like this may be a bullish breakout, and then it just gave up the ghost and collapsed all the way back down. Massive bearish sentiment, right back down again, and what did that end up doing? Effectively nothing, right? That just further solidified the range. That range just made it a little bit wider. Now, to the downside, because of the cycle up into down, I would be looking for an equidistant breakout up as I would be down. So I'm looking for a major objective down at 48.7. I would love to see that area tested. If the sellers can get their hands on it, that would be a major location. But as we're down here, buyers are going to begin scaling in. We just failed through the highs of a range after seeing several other ranges fail. It has to be assumed that buyers are going to be buying into this as well. Now, again, if we zoom out a little bit, we can see that major objective to the downside. Where does it come into? Right at the bottom area where we saw a bunch of back and forth prior. So this location is definitely a nice area of potential bounce, getting a nice pullback down into the sellers meeting their major objective, and then finding some bouncing to kick the market back up towards the highs. But again, at the same token, we just failed aggressively through the highs. We may be looking for something like a half back into earlier support turned resistance maybe, and then a turn right back down to the lows. So it really, all in all, what I'm looking to do is I'm looking to buy the pullback into 48.7, use that bounce to get up into resistance at 54.7. If they show that they want to hold that, looking to sell back down. If, however, they do decide that they want to break out to the upside, then just looking to continue that long bias all the way up back towards the highs. So kind of a double-edged sword here on gold. Lots of options in terms of, how you want to approach it. Overall, I'm kind of looking to approach it on both sides, buy and sell. On the bonds, fairly range-bound still. We haven't really accomplished a whole lot. We did get a nice bullish run going into Friday, and then today a little bit of a pullback. Almost looked like a flag pattern kind of setting up here with the market tilting down, and they got a little overzealous at the lows. They broke through the bottom. We are also testing that the only pullback they had on that big breakout from Friday, and we are seeing the buyers try to defend it. So this is definitely a location where buyers are scaling in for a potential move higher. And one big thing that you're going to want to keep your eyes on, not only the channel highs, because that will likely act as resistance, but also the earlier wedge bottom, right? We just broke through the wedge bottom. You can see the channel that we had drawn on the bottom. Once we broke through, we tested it as resistance. You're expecting the same thing here, where we break out of the wedge lows, they come back to it, especially that perfect storm cross right there. You can get a little bounce right there, and then potentially another drive lower. So again, a double-edged sword. Looking to buy off of support into resistance, and then seeing what the market wants to do. If they want to hold it, then looking to sell and drive the market further down. On crude oil, mostly just a wedge. We don't really have a whole lot to work with here on crude other than a huge range on our hands. We had some very nice overnight session rising higher. When they broke down, we came into an area of support, earlier bouncing. They tried going back up. All they managed to do was tap a new high and completely fail back down. Small little head and shoulders, definitely possible, right back down to the lows. And after we had that spike down, we began channeling our way lower. So with that kind of spike down into a channel, we are also forming the potential range area. Major support in here will turn into resistance, and major support earlier is acting as support again. That may just have us cycling back and forth inside here. Now, we do also have a wedge working its way down. We haven't really overextended the seller's end at the lows, and we haven't broken the top side either. So as long as this stays intact, we may be good to go to continue trading this all the way down until we finally either exhaust the wedge or we get one of the two, an exhaustive breakout or a failure, and then we can treat it accordingly. As long as the support's in play, though, I'm looking to be a buyer down here up into resistance. Until we get up there, then I'm looking to sell. And we also have a large monthly level, and since tomorrow is the last day of the month, that is a big level of concern as well at 54.20. So be careful on crude. It could get a little bit whippy, but for the most part, big range. Looking to buy low, sell high, try to stay out of the middle. On the NASDAQ, even bigger range. We had quite the movement off of the Sunday open. Big old candle that kicked the day off, and they came all the way back down, almost contesting that low, right? They missed it by a little bit, but that was a pretty heavy challenge from the sellers. And when the buyers, it was their turn to show up and punch it through the highs, they didn't do so well. They fell apart. So with that failure and seeing how aggressive the sellers were able to get and on that push down, they may not have broken the lows, but they sure rattled the cage of the buyers. When they came back up, failed, and then they made a lower high and turned back down. It definitely looks like a bigger head and shoulders working its way lower as well into a nice bear cycle down. Got a little overzealous right after the morning U.S. Open, and after that, it quickly reversed right back up, and now we have a bull wedge that is ascending towards our area of resistance. We've seen these highs hold several times between 50.5 up to 52.5, so it wouldn't be a surprise at all to see more resistance there. Until we get to that point, definitely looking to buy maybe smaller pullbacks to get up there, but once we get up there, being very cautious because we may get a little head fake and may break out through the highs, but more likely it is going to fall down with sellers above. Same picture on the S&P, a little bit more range bound, as is the S&P. If you've traded for longer than 30 seconds, you know that. Overall, very strong Sunday candle again. They pulled back very, very far. This one got even further contesting into that first candle. Came back up to the highs. Once they got above the highs, they tried holding it as support. Didn't really do so well. Broke down. They gave it one more shot, and all they managed to do was get a double top and a cycle back down to a new low. When they made the new low, they found a huge amount of support right back up. And the S&P is in a slightly different scenario in that we're already at that area of resistance. So 2370 up to 2373.25 is the area of interest. Possible wedge, we are breaking out. I would love to see the market come back to those highs and then look to sell it right back down again. So that's going to be the daily market outlook for our futures markets. Hopefully you had a good month in February. We're going on to the end of the month this time around, with tomorrow being the final day of the month. On the news docket, we do have a decent amount of stuff coming out tomorrow. We have the GDP early in the morning at 8:30 Eastern. At 10 o'clock Eastern, we have the CB consumer confidence. And then the big one, which may have the markets go a little bit early in, early out type sentiment, President Trump is speaking at 1600 Eastern, where that may have a lot of folks cutting it, calling it a day, and leaving it around noon so they don't have to deal with it. Anytime that we have either Trump or Yellen on the microphone, it sure seems like things get a little bit weird, and tomorrow might not be any exception. So play it safe tomorrow. Hopefully you wrap up the month well, and if you have any questions, as always, you can send me an email, jbrink@slingshotfutures.com. Make a plan, trade the plan, follow those rules, and we will see you all tomorrow.